Hi, everyone. This is Chris Tanis, one of the founders and the COO of Beyond Pay. Thanks for joining us during this very unique and challenging time, not only in our business, but in everybody's lives and everybody's businesses. So I hope everyone's doing well and staying healthy. Today, we're going to talk in a little bit more detail about the two new acts that Congress has passed, specifically the Family First Coronavirus Response Act and the CARES Act. So the main focus of today's webinar is going to be on how we help you manage the paid sick leave portions of the Families First Act, because these are things that you need to be taking care of proactively as they happen and getting them entered into the system properly so that we can track and help you calculate those credits. So feel free to put questions in the chat box so we can try to take questions as we go along and see that we're covering everything. There's going to be a lot here that we can't cover, but in addition, we're also towards the end going to be talking about the CARES Act and some of the other assistance that's available to employers. So that information has been updated and actually changed, and it is changing as of yesterday. And some of those programs do affect these credits that are calculated in the Families First Coronavirus Act. So I'll do my best to summarize those, and then also to explain the overlaps and how you need to worry about that, and then also take some questions for you, keeping in mind that this is going to be a general informational webinar, and that you'll have to consult with your tax advisor, your accountant, on ultimately what direction you decide to take. So with that, I'm going to turn it back over to Jonathan so he can get into the meat of the presentation.
Sounds good. All right. Well, thanks for joining us. If this is your first week, if you missed last week's webinar, I would encourage you to watch it. There is a recording available on our FAQ page, and I'll show you how to get there in a moment too. So we're not going to repeat everything we talked about last week. We are going to do a brief summary though. So if you missed last week, I would encourage you to stay on this call. I think it'll still be helpful, but I still think it's worth going back and watching it. As you may have noticed, just like the news is constantly changing, these laws are constantly changing. We're getting clarifications every day. I'm listening to other people's webinars and hearing them say things that I don't think are correct, and I'll look it up and they are correct, or vice versa. There were even a couple things that I said that were incorrect last time. So, I apologize that this is all emerging. So we're making our best effort at this, but there are a bunch of things that we do know. So, we're going to share those things that we do know, and then we'll share some more of the gray areas. We're also going to share some links on where you can go for more information that I found the most helpful. We're certainly not going to be able to cover everything, so we're going to try to cover the parts that I think are important. The big focus today, though, is how Beyond Pay is going to track the paid sick leave and the extended family leave, how Beyond Pay is going to track that in the system. So our main focus there is to communicate that message, but there will also be a lot of information in this webinar. I wouldn't bother trying to take notes. These slides are available for you to review later. Just sit back and relax. If you guys have questions, please ask them in the chat window. We'll get to as many of them as we can. All right, I'm going to turn off my video now, and we'll move forward. So the first thing I wanted to do is I'm going to just jump out of the slide. So the very first thing I do is jump out of the slide and share. There's a link. Again, this is available on beyondpay.com. And if you go to beyondpay.com and click on the FAQ page, if you haven't seen that yet, please use that as a resource, bookmark it. One of the first links we highlight there is the Department of Labor's pandemic site. I really would encourage everybody on this webinar to read every piece of information that's available on this page, okay? And if you did read it earlier, for example, this Family First question and answer link, this is a very good page. This was only about like 8 questions when we did this webinar last week. And now you can see, what are we up to? We've got 59 questions now, okay? I know it's a lot, but I would really encourage you to read those questions because these are the common questions that the IRS is getting. They've made a lot of clarifications, and I'm going to share some of those clarifications as well. There's also a link to the actual law. So if you wanted to go in and see the actual law that as written, all right, we provided a link there. I always like SHRM as a resource. They have a lot of good articles on handling HR as well. So I like that. So I put these links front and center. It's also at the end of my slide. All right, and as I mentioned last week, there's a couple things that Beyond Pay is doing. So we put together an FAQ page. We've postponed the new UI. All right, we've also opened up hr@beyondpay.com. So please use that. If you have COVID-19 related questions, please use that. I know many of you already have. But that's available to you. That's also how we're getting our questions that you guys have and kind of formatting the information that we're trying to present in the most easy way possible, as easy as we can. I mean, this is not easy. This is what we're going to cover today. So these are the big 4 items that we're going to cover today. How do we track and report the new leave? All right. How do we get our money back, right? We paid this money for these employees. The government's saying we have to pay our employees leave now. But how do we pay that? How do we get that money back? When are my employees eligible? And then what is the CARES Act? So you may have heard it as a stimulus package, right? The second stimulus package. So the government released the CARES Act, and there's a ton of programs available for small businesses especially. All right, so we're going to talk a little bit about that. That's where Chris mentioned you probably want to get your accountant involved. So that's one to talk to your tax advisor a lot about, but we'll at least share some of the things that we've learned around that. And I'm going to jump through these slides very quickly. These are the same slides that we used last week. We just added to them and corrected them. So we'll be jumping through here pretty quickly. Again, you might want to watch last week's webinar if you want more details on some of the basics here. So one thing I wanted to highlight, I mentioned this possible exemptions for small business with less than 50 employees last week, and I know many of you were planning on using this. I just want you to be careful. There's actually, in that FAQ page that I mentioned earlier, there's some clarifications, the very last 2 questions actually. So I'll talk about that in a second, but I just want to highlight this. You may not be as exempt as you think you might be, okay? So please don't plan on just being exempt because you have less than 50 employees. That's not how this works. So I just wanted to highlight that because I kind of mentioned it last week, I feel like, but there were a lot of questions about this as follow-up, so I wanted to highlight that. It's effective April 1st, okay? So today, it is effective today through the end of December, okay? So only for this year. All right, so this is a new slide. So the detailed law, and we're not going to go through this in a lot of detail, but I just wanted to highlight and have links to the reasons that employees are eligible for this COVID, okay, for this COVID leave. All right, so you have the text here. I also provided the link so you can look at the actual text of the law, and I'm summarizing it on this page. So we've got two items here. We've got COVID-19 related reasons, okay? So people are taking off, they're unable to work for self-care, all right? I'm calling it self-care, and I'm calling it care of spouse, child, or parent. Okay, these are the 2 reasons. Now, technically, there's 6 reasons, all right? The first 3 are for self-care, and the second 3 are for care of family, all right? So I'm breaking them down into 2 categories here. And the thing I wanted to highlight today is this one right here. So number 5. So for extended family leave, all right, that's the 10 weeks of leave that you can get, or for the 10 days of paid family leave, all right, that one is capped at 2/3 or $200. That's the only one that's eligible for the small business exemption. Okay, so I just want to make sure I highlighted that first. So if an employee is caring for a son or daughter, okay, because the school's closed or their care provider is closed, that's the only one that you're allowed to, and again, you got to read that FAQ page for details on when you're eligible for that if you're less than 50. But if it jeopardizes your business, you potentially could get out of paying this. You can't get out of paying the sick care. If they're an employed individual as of April 1st, right? If you already terminated them, if they're already on furlough prior to April 1st, this wouldn't apply. But if they're an employee as of April 1st, then they're eligible for the paid sick leave. All right. and then there's a possible exemption for this specific reason right here. So hopefully I explained that well. Again, post that in chat if you guys, or in the questions spot if you guys have questions on that, or email hr@beyondpay.com. I just wanted to make sure I covered that. All right, so brief summary. So we've got paid family sick leave, all right, emergency paid sick leave. So you can, an employer has to pay their employees if their employee gets sick. So if you're employed as of April 1st and the employee gets COVID, thinks they have COVID, has symptoms of COVID, a doctor tells them they have COVID, or if the business is ordered to shut down by the government and the employee cannot telework, they can't work from home, then they're eligible for this paid sick leave. At the same time, if they need to stay home because they need to care for a spouse, child, or parent, they're eligible for a lesser amount of sick leave. And that's for a 2-week period, 10 days, 80 hours total, potentially. All right, here's the amounts that they can receive. We'll probably repeat this over and over again, so I'm not going to go through this slide in detail because that'll come up again. All right, and then the third provision, all right, so we got self-care, we've got care for family. Those are the first two. Now we've got extended family leave. All right, so this is up to 10 weeks of leave at 2/3 of an employee's regular pay, and it's capped at $200 per day or $10,000 in the aggregate. All right, so this is basically an extension of FMLA. All right, but it's not paid by the government through disability. It's paid by the employer and then reimbursed through tax credits. All right, so again, we're going to skip through some of these slides. All right, so reimbursed through tax credits. So this is the area where you'll want to start paying attention. if you've zoned out at this point, come back to me. So if you're a client of Beyond Pay, all right, one of the things that we're going to be doing, and I'm going to be showing you how to do this in a moment, is you're going to be reporting paid sick leave of any of your employees through our system. You're going to use specific earnings codes that we have set up for you. And when you do that, we're going to track the tax credits that are due to you. All right, so what our plan is, what we're going to do is whenever you process a payroll, as long as you use the correct earnings codes that we're setting up, all right, then we are going to automatically reduce your federal tax liability, and we're not going to debit that money from you to collect your payroll taxes. All right, so if you were to pay somebody, if your total payroll was $100,000, all right, and you had 2 people that were on family leave and they were getting a total of $2,000, okay, and the taxes, the federal taxes that were calculated came out to, let's say, $10,000, all right, we would reduce the $10,000 tax payments that you owe to the IRS by the $2,000 of wages that you paid out your employees for the paid sick leave, and we would only pay $8,000 to the IRS. All right, now there's another scenario that comes up is, let's say your total payroll is $10,000, your tax liability is $1,000, okay, you pay your employees, maybe 3 employees are on sick leave, and it's a total of $3,000 that you paid your employees for gross pay for sick leave. So we would reduce the $1,000 tax liability by $3,000, but everybody knows math, that goes down to 0, and now you're owed $2,000. All right, there is a form that you will fill out and give to Beyond Pay, and then we will file that form with the IRS for you, and then they're going to, quote, I'll put it in quotes, you can't see my video now, but they're going to rush money to you for that excess $2,000. We don't know exactly how long that's going to take. We haven't tried it yet. It's effective today, but nobody's run payrolls yet, so we haven't tried to get that credit yet. We don't know exactly what that's going to look like, but that's how this is going to work. So if you process payroll and your credits are down to 0, that's going to happen automatically. Beyond Pay is going to do that for you. If you're owed money by the IRS, you have 2 options. You can fill out that form to get your money back sooner, or you can wait till the end of the quarter to get that money when we file your quarterly 941 in July for June.
And I'll just add something here that this specific credit is allowed even if you participate in some of the other relief programs, including the payroll protection loan or the economic disaster recovery loan. So you can still do this and get a PPP loan.
Cool. All right. So the other thing I wanted to highlight, again, I skipped a couple slides. Don't forget to catch the other webinar. You don't have to listen to all the questions at the end if you don't want. It was a long one. Posters are available. Okay, so I said this last week, but I'll say it again. If you haven't handed these out to employers or to your employees, it's late. So please make sure you do this. Again, we provide the links right here. They're on our website. If you go to the FAQ page, they're free. You don't need to buy them or anything. You just download them from the IRS, from the Department of Labor. All right, so make sure you hand out posters to all of your employees. If you're less than 500 employees, if you have more than 500 employees, most of what we talk about today probably doesn't apply to you. Okay, so I wanted to share that. This is effective April 1st. The number one question, what do I do if I had employees on leave prior to April 1st? They're not eligible for paid sick for reimbursements. You can pay them whatever you want, but you're not eligible for reimbursement from the government under the Families First Coronavirus Response Act. All right, we will talk about the CARES Act towards the end of this, where there are some programs that are available, but for this paid sick leave that we're talking about, you cannot pay your employees wages from prior to 4/1. All right, we don't know what the reporting is going to be like. We don't know what the backlash will be, but like they're very, very clear that you cannot pay paid sick leave and get reimbursed by the government if you paid it prior to the 4/1 work date. All right, and that is based on the working day, not on the payroll date. So if you process a payroll today, dated Friday, right, that doesn't somehow get you around being able to pay them paid sick leave, right? Because this pay period that you're running today for Friday probably covered March pay period dates. Okay, so now I want to talk about, what about Beyond Pay? What about our system? Okay, so what are we doing to set this up for you? So we actually finally got this finalized. Development got this finalized just a couple hours ago. So this is hot off the press. So we are creating 3 new time offs. Okay, so we are going into your system and doing this, whether you want it or not. Okay, we're doing this. You will be able to turn it off later if you want. We'll be sending further communications. It was just important for us to get this out to you guys as soon as possible. So I realized that, I kind of wish we had time to stage this and ask for permission and kind of talk to each of you about this. It's just not feasible for the timeline that we're working on. So we made the decision to set this up for you, and then you guys can turn it off or modify or tweak it or ask us questions on how to tweak it, as you see appropriate. However, I think this is going to be valid and relevant for everybody. We did exclude companies that were over 500 employees. So, but this is going to be set up in your system. All right. So this is important to pay attention here. All right. So we created 3 new time off categories, and they're called emergency, family, and medical leave. Okay. They're called emergency paid sick leave. And there's 2 subcategories of that for self-care and for care of spouse, child, or parent. All right, we haven't finished setting this up for everybody. So if you check your account, I don't know whether yours will be ready yet, but we're actively working through every company to set this up. Unfortunately, it's not something that we can just apply to all companies all at once. So, we're going in individually to each company one at a time. And we're trying to prioritize companies that are going to be running payrolls a little bit sooner for this pay period, but that's kind of behind the scenes. All right, we've also created 3 new earnings codes. Okay, so when you look at your earnings codes that you're going to be able to select to pay employees, there's going to be 3 new earnings codes. Okay, and these are what they're going to look like. And again, this is a good summary, so I will go through it this time since I didn't go through it before. So first, we've got COVID-19 sick pay, 10 days. All right, this is that self-care. All right, and if you'll remember, when we're talking about the text, it's these first 3 reasons. That's the self-care. The employee is subject to a federal, state, or local quarantine. The employee has been advised by a healthcare provider or self-quarantine due to concerns related to COVID, or the employee is experiencing symptoms and seeking a medical diagnosis. Okay, so that's this one. You need to use this earnings code if you are paying them paid sick leave and want to get reimbursed. If you create your own earnings code, if you created your own earnings code a day or 2 ago, if you went into Beyond Pay and added your own earnings code to track this, it will not work, okay? And it'll require adjustments. It won't be easy. We may even need to charge fees, but like, I'm just trying to say, do not use your own earnings codes. You have to use the earnings codes that we're creating for you. All right, we'll probably put that in another email too, but this is just really important, okay? Because there was a lot of programming that had to go into these earnings codes in order to do all this crazy stuff that the government's having all these companies do. All right, and with that, all right, this is used for employer paid sick leave. The employer is paying it. These are gross wages in net paid to the employee in a check from the company written off the company's bank account. It's paid at their full base comp rate for 10 days with a maximum of $511 per day and a total max for the year of $5,110. Then we got childcare. So these are for those other 3 reasons. All right, so the other 3 reasons, the employee is caring for an individual who's sick, or the individual's son or daughter, their school's closed and they have to care for their child. Now, this is the one potentially eligible for that less than 50 small business exemption. Again, read the FAQ if you're interested in trying to take advantage of that, because they've clarified what is required to have that exemption, but it doesn't apply to most. All right, then we've got COVID-19 childcare. This is the 10 weeks. So this is basically the company paying for 10 weeks of vacation. I shouldn't call it vacation, that's not what I mean, but paid leave, right? So this is paying 10 weeks of paid leave for an employee to pay for childcare, or for an employee not to work while they take care of childcare. All right, it's paid at 2/3 their base comp rate for 10 weeks, maximum of $200 a day, and the total maximum is $10,000. Okay, so here we're going to talk a little bit about what is Beyond Pay doing, and then what do you as an employer need to worry about at least from Beyond Pay's perspective. Okay, so I wish I could just sit here and say we've programmed everything where all you got to do is say this person wants to take paid sick leave, and the system just does everything for you, and you don't have to do anything. I wish I could say that, but unfortunately, it's not quite going to be that easy. We tried to tee it off as best we could, but there are going to be some things that you guys will have to pay attention to. So I'm going to try to explain them here. All right, so first off, companies must determine eligibilities for the tax credit. Okay, so all these things we talked about, is the employee employed? All right, were they laid off? That's not something that we can determine for you. All right, so you need to make sure that these employees are eligible. They've made the eligibility pretty straightforward, all right, but you need to make sure they're eligible. A good example of this, all right, is around how many hours they're eligible, right? For a full-time employee, and we'll talk more about this in a second, but for a full-time employee, it's a little bit more straightforward because, here, I'm sharing the wrong view. For a full-time employee, this is a little bit more straightforward because you get 80 hours. Okay, so that's pretty straightforward. But for a part-time employee, there's actually a process where you look back at the last 6 months and see on average how many hours they worked over a 2-week period. And we've created a report to help you guys with that. But when we say eligibility, it's not just whether they're eligible or not, but it's also how much are they eligible for. All right, so you don't want to get in a situation where you pay the employee one thing and then it turns out that you're only going to get reimbursed for a piece of that, a partial piece of that. So that's going to be something that you're going to need to pay attention to. All right, we're creating 3 new earnings codes. Okay. Rate multipliers will default to 1.0 of their base compensation. So this was a little bit more of an internal note. I probably need to modify this slide because it doesn't make as much sense. But there's a couple ways of setting this up that we're currently going through. And again, this is all emerging. This literally just got released a couple hours ago. So I admit we're still trying to come up with the best way. If you are a TLM client, the way we're going to do it is we're going to set up the rate multiplier to be 1.0 of base compensation, and you're going to be tracking what the rate is in TLM. If you're not a time and labor management client, so you're not using us for processing timesheets for employees, and you're just entering in the gross wages and hours worked for the total pay period through payroll, all right, we'll probably set up the family leave and the care for family codes. We'll probably set them up to be 2/3 of your base compensation automatically. All right, so for most circumstances, all you'll have to do is enter in the number of hours they're getting for paid leave for the week. And then as long as their base compensation is accurate, it's just going to flow through and it's just going to work for you. But there are going to be some exceptions. There's some companies that pay multiple rates to employees based on the different kinds of jobs that they work. You're going to need to do some legwork to figure out what their average rate of pay should be for this paid leave. Okay, so that's not quite as straightforward. There's not something that we can just do to automatically figure out what that would be. So when I say eligible, you're going to need to make sure the employee is eligible. All right, we're going to create the earnings codes, but then companies must enforce the daily limits. Okay, so you need to make sure, if you're processing a payroll and you are paying somebody 40 hours of paid sick leave, our system doesn't have any way of knowing if that's 10 hours on one day, 40 hours on another day, or we don't know if it's over the $510 per day limit, right? Maybe you reported paid sick leave of 80 hours, great, and or 40 hours, okay, but you did a total of, I'm not doing the math good in my head, but you did a total that's greater than the daily limits, right? We know if you went over the annual limits, so we're programming in the annual limits so that you don't pay an employee more than the maximum allowed by law. But we don't know if you're going over the daily limits, in which case you might report it to us, and then the client, then you won't get reimbursed by the government. You'll get reimbursed initially, but then you could potentially, they might take it back later if we mess up on that. All right, and then companies need to determine the rate of pay if base compensation rates are not used. So if you're using the rate of base compensation, this is going to work pretty darn well, pretty darn easily. But if you have any complex rate calculations going on, you just need to pay attention to this when you put somebody on leave. You just got to check their check and make sure that's it's looking good. All right, some notes about these earnings codes. All right, fully taxable for federal taxes with the exception of Social Security. All right, so this is not subject to employer Social Security. If there's anybody that has reports set up to verify that your Social Security for employee and employer matches, it's no longer going to match. Okay, so that's going to be kind of a new thing. Usually, employer and employee Social Security are always the same. And it's an easy calculation, but now they're going to be different for anybody that has leave. It's also fully taxable for all state and local jurisdictions. As far as we're aware, this is fully taxable for everything else. So we haven't seen anything that says it's not subject to unemployment, FUTA. It's just Social Security, employer Social Security, that the 6.2% that the employer pays, that's what this is not subject to. Those earnings code taxabilities can be overridden. All right, so the way they're set up is they can be overridden. So if something changes in the future, you'll be able to do that. Or if you have some kind of unique circumstance, I don't know why you would use that, but I put that note in there. All right, the COVID-19 earnings will be used to offset the federal tax liabilities. All right, that's what I mentioned earlier. So when you process your payroll, we're going to reduce your taxable liabilities by the amounts of credits that you use as long as you use these codes. All right, and then payroll reports will be modified to reflect the new earnings codes. I admit that hasn't been done yet, so bear with us. When you run your first couple payrolls, the reports maybe they won't tie out. I think they will, but I think they'll be done by then. We're working hard on it, but there might be some confusion with that, so just bear with us. But just keep in mind that there might even be some situations where we process a payroll and we're calculating everything correctly, and then but the reports might say that we're going to debit your full tax liability, but then when we actually do what we need to in the back end, we might collect less money than your reports say. All right, so there might be a period of time where that happens. So we just ask for your patience and you bear with us. At the same time, anybody that's using general ledger, all right, so if you're using our general ledger exports and you're importing that into your GL system, there might be some situations where those reports won't tie out because we're debiting less money because we're not collecting the full federal tax liability because of your credits due. All right. We also, if you fill out that form with the government to get your tax credits sooner rather than waiting till the end of the quarter, that also won't be reflected in your GL because it's not going to be entered in our system anywhere. We're just going to be tracking that behind the scenes so that we can report it at the end of the quarter to reconcile that at the end of the quarter. I know this is getting complicated and I'm speaking a lot and saying a lot. So as you have questions, please put them here. But this is the part, the tax credit part, that we just ask for your patience on. We're getting ourselves organized. We're putting some processes in place to make sure that we handle this well for you. But it's something that's never been done before. It's very different. So we just ask for your patience. There might be a period of time where, again, like I said, your reports might be off just a little bit, right? Because we're debiting an amount different than what's reported on the reports, and then your GL files may be off just a little bit. All right. Now, if you use us for accruals, okay, so not every company on here necessarily uses us for benefit accruals. And when I say benefit accruals, these are time off calculations, time off accruals. So, for every hour you work, all right, you get 0.1 hours of sick, all right, or every 2 weeks you get 8 hours of PTO, right? That's what we call a benefit accrual in our system. So if you're using us to calculate that, we are automatically going to be adding a full-time COVID. Oh, let me go back. We're going to be adding a full-time COVID and a part-time COVID for those 3 time off codes that I said earlier. All right, we're going to be creating 3 new not accrual profiles. We're going to be adding 3 new time offs in your accrual profiles. All right, let me say that again. So I talked about earlier how we're creating 3 new time off categories that we're setting up on your behalf, whether you want them or not. You're welcome to rearrange them after we're done. All right, we're also going to be creating 3 earnings codes. We're going to be tying those time offs to the earnings codes. And then we're going to go in and modify your accrual profiles that you have set up in the system. And we're modifying by adding the 3 new time offs to those accruals. If you're not using accruals right now, we're not doing this. It wouldn't make any sense because you're not using. But if you're using time off accruals now, we're going to be modifying your policies just a little bit. All right, so for full-time employees, it's actually pretty easy and it's going to be pretty automated. So as long as you've identified full-time employees, and this is a good time to say, we might be reaching out to you if we start going into your system and see that you're not tracking whether an employee is full-time or part-time. We might be reaching out to you to identify which employees are full-time and which employees are part-time. We might need your help with that to classify employees as one or the other. Otherwise, we're not going to know how to apply this. So there might be some involvement on your part. You might get reached out to on that part. So if you know you're not tracking full-time, part-time right now in our system, it might be a good time just to put together a brief little spreadsheet for us and say, hey, here's a list of all my employees and here's who's part-time and here's who's full-time. That could be helpful. All right, full-time employees, they get 80 hours. It doesn't accrue at the beginning of the next year. Okay, so this is only going to be for this year. They get 80 hours as long as they're a full-time employee as of 4/1. All right, that we're going to be automating. We're going to be setting that up. Anybody labeled as full-time, we're going to be giving them a balance of 80 hours available to use. Part-time workers is tricky. All right, so of course, it can't be easy. So for part-time workers, the way it's worded is you have to make an estimate. Okay, you have to make an estimate of how many hours they would have worked were they to work their scheduled shift for the next week. And that can be hard because maybe you didn't have a scheduled shift, maybe you don't know. So the Department of Labor has some guidelines. You can look at the previous 6 months, all right, which is 13 weeks, and figure out what the average is per week, and then you can multiply that by 2 and figure out what the averaged hours worked per 2-week period is. Beyond Pay is creating a report for you to run to identify that. The problem is we can't just import those balances, even if we use the previous 6 months, because maybe the employee got hired 3 months ago. Maybe they got hired 2 months ago. Maybe for the first 3 months of that 6-month period, they worked a ton of hours, and then for the next 3 months, they worked very little hours. Maybe the opposite. Maybe they hardly worked anything in the first 3 months, and then the last 3 months, they worked a ton. So we can't use the 6-week average if they had a very variable schedule. So you can use our report as a good guideline, because that's what the Department of Labor said to use, or you can just take a best guess. And again, you might want to read those FAQs because they go into a lot of detail on that. But we're providing a report for you to use to figure that out. But we don't know when the employee is going to request time off. So you kind of, when they request time off, you kind of have to go in and look and run that report and then put that balance in manually for them. So there's just not really a better way of doing it. So when an employee requests, a part-time employee requests this paid sick leave that they're eligible for, you kind of have to go into our system, run the report, get their average hours, but then maybe do a good estimate check and say, oh, you know what, though, their schedule is very variable. They were supposed to work this many hours for the next 2 weeks, so I probably should give them that instead. If anybody has any questions on that one, I hope I explained that well, but if you have questions, feel free to post them. All right, so we have a report. It's a calculated time summary report. We'll be sending out more emails on this. We're also going to have a webinar next week to actually log into the system and look at the system and walk everybody through this, because you guys are going to be processing payrolls starting next week. So we're going to be doing more webinars on that, the specifics on the practical side there too. But we'll have a report ready for you guys to track. This is for part-time workers, because you can't just give part-time workers the full 80 hours. You have to give the part-time workers up to 80 hours, up to 10 days, okay, but over a 2-week period. There's some exceptions to that too. If you're doing intermittent, they allow some intermittent types of leave. All right. One other thing I didn't do a slide for, but I was listening to a webinar from somebody else a little bit earlier, and there was also some language when they were talking about, there was a clarification with the new CARES Act that if you terminate an employer prior to 4/1 because of the COVID situation, if you rehire them, all right, it says as a 4/1. I don't know how that works if you hire them 4/2, 4/3, 4/7, 5/1. But if you rehire them and they were employed prior to COVID, they are immediately eligible for the paid sick. Okay. So there was some clarification with that in the FAQ that I read, and then I heard that reinforced on another webinar. So I just wanted to mention that as well. All right, so in summary, 3 earnings codes that we're creating for you. All right, 3 time off codes. All right, you have to use these earnings codes in payroll. We're setting them up for you. We're working on it as we speak. We started yesterday once this was finalized. All right, and then expect the tax credits to be calculated automatically as long as you're using those codes. We're creating the accrual profiles. We're modifying your accrual profiles a little bit to accommodate the new law. Not many people on the phone. I checked the attendee list. Not many. I think it was only one of you are using our leave of absence module. If you're using leave of absence, we can automate this really well. So if you happen to be using our leave of absence module, then this works really well especially for the family leave, and it just kind of all flows through. But that didn't apply to a lot of people, so we'll be reaching out to you individually. Okay. All right. And then again, I said this already. I just wanted to reinforce it. So Beyond Pay will automatically reduce your federal tax liability by any credits calculated through the paid family sick leave. Excess credits due can be requested by filling out a form. I say TBD, but that was just released, so we now have the official form. All right. And then excess credits can be waited until your second quarter 941 is filed. All right. So once we file the April through June returns, those are available. You'll get refunded then. So if you fill out this form ahead of time, you're going to send them to us, and then we're going to file them for you. That way we can track it and make sure your 941 is correct at the end of the quarter. Our fear would be that you send the form directly to the government and you don't tell us, and now we file your tax return, and now you end up getting penalties and interest because you got refunded the money and we didn't know that you got refunded the money. So it's going to be important that you process that through us. All right, I'm going to let Chris take over and just talk about a couple of the things that are going on with the CARES Act. Okay, so this was the new stimulus package that was released last week, and they made some changes to the original FFCRA, a couple clarifications and answers to questions, but it's also a totally new thing with some totally new programs that are available that you very well probably are eligible for. All right, especially that PPP loan. Everybody on this call is likely eligible for that, so please pay attention and contact your tax advisor. As you can also ask questions here. We might not know all the answers, but we'll field questions too. So thank you, everybody. Chris, go ahead.
Jonathan, before you do that, why don't you go through some of the questions in the chat box and in the question and answer window, because they're specific to what you just talked about.
Okay, perfect. All right, so let me pull them up. So what if someone has a PTO time available that they can use their PTO time? Yeah, good question. And this was also clarified. I think I answered this incorrectly on the last webinar, in fact. So you can pay, if an employee is eligible for PTO time, you can pay them PTO time anytime. If they're eligible for sick time, you can pay them sick time. You can pay them sick time first and then pay them the emergency family leave. The only thing that I read in the law, at least my understanding, I'm not a lawyer, but at least my understanding is if an employee requests the emergency family leave, you're not allowed to say no. Okay, so you can't say, oh, well, no, you can't have that. I'm going to give you PTO instead. All right, I don't know exactly why a company would really want that. I mean, if they wanted this, if they're taking the family leave, they're only getting 2/3 pay, so why not get your full pay for PTO? But that was the only thing I noticed. Like, you have to, if the employee, it's the employee's choice basically. So if the employee wants PTO time, great. If you talk to them and say, hey, is it okay? Can you take PTO first and then we'll give you the family leave? And the employee says, oh, sure, no problem. Then it's fine. But if the employee demands that they want the paid sick leave and you say, hey, can I give you the PTO instead? And then for some reason they say no, then you have to give them the paid sick leave. How does the 80-hour sick pay and the New Jersey earned sick pay work together? So it's kind of independent. So you can't pay them the sick pay and then get credit for it. So if you're doing the sick pay with New Jersey, right, because you've accrued New Jersey sick time, or New Jersey's told you have to pay your workers for sick time, you can't pay them for the sick time and then get reimbursed under the new federal law. That's not how it works. So if they have any sick time available and the employee wants to use that, they can use it. It's kind of treated the same way as PTO at that point. Okay, so this is not replacing the New Jersey. This is on top of any program that you have. So if your employee handbook or if your state dictates that you have a certain amount of PTO or paid sick time, you still are obligated to pay that to employees if it meets the conditions, right? You can't be discriminatory, right? And in fact, that's a good way to say it. You can never be discriminatory. So you can't say, oh, well, you can use PTO, but you can't, but yeah, that does. So they can be used in conjunction. Your sick time, your New Jersey sick time, your New York sick time, California has it, a bunch of other states have it. You can use that on top of, but you can't use it instead of and get reimbursed under the sick laws. So you can't reduce the paid sick leave balance and the New Jersey sick leave balance. You can't do both of them at the same time for the same hours. Will the earnings codes automatically be applied if you're using the new sick time? Yes. So we will be adding the earnings codes for you on your behalf. There won't be anything you have to do from that perspective. The parts that you will need to do is when you're processing payroll, if you're using TLM, you're just putting the time off on the timesheets and it'll flow through to payroll. And then you want to validate that the rates used are correct. If you're just using payroll, you want to enter in using the earnings code for any paid sick time. And you just need to be careful that you're not paying them more than $510 a day if they're, or $511 a day if you're using the self-care, or more than $200 a day if using, or 2/3 of their salary if using the family care. What if your payroll is this Friday, so most days are before this takes effect, and 3 days it is all the employees are salary? Yeah, so if your payroll is Friday, if you have any employees, it goes by period date. Maybe that's a better way of answering your question. So this goes by period date. So if your check date is Friday and that covers the pay period of, I need a calendar in front of me. Let me just pull up my calendar over here on another screen. All right, so if your check date is this Friday the 3rd, okay, and it's covering wages from Monday the 30th through Friday the 3rd, if you have employees that are off on Wednesday the 1st, Wednesday the 2nd, Wednesday the 3rd for this paid sick leave, then I would suggest get on the phone with your CSR and see if we can get it in there with the payroll today. Because it would be best if we can try to squeeze it in today and get it processed right the first time, as opposed to having to make adjustments later. I realize that might not be feasible. Maybe you already processed payrolls. We'll just have to work with you to fix that retroactively. But as of April 1st, anybody paid sick leave for April 1st, okay, then you need to use the new earnings codes. All right, so if you're processing payroll through Friday today and your pay period happens to be the same as your check date, I know that's pretty rare now, but it does happen from time to time. Then we want to try to get it right. We can now squeeze it in. The codes are live now as of a couple hours ago, so we can squeeze it in. Maybe just reach out to your CSR just to get that teed off. But if your check date is Friday the 3rd and it's covering wages maybe through Monday the 30th or the week before, maybe through like Friday the 27th or Saturday the 28th, none of this applies yet. All right, this is only for wages paid on April 1st for work that should have been performed April 1st. I hope I explained that well. Feel free to type in a follow-up question if I didn't clarify that well. The COVID time off request will now automatically convert to the corresponding earnings codes. Correct. Yep. So this is in process. This has not been completed yet. But we are actively working on it, and we're hoping to be done. I don't think we're going to hit today, but this week we will be done with everybody. We're just trying to prioritize the companies that are processing this week and then early next week. How do we handle workers doing alternate weeks to care for their child? Yeah, good question. So there is provision in here for intermittent leave. Okay, so if you have two parents working and then they're going to alternate with their spouse, where they're going to take care of a child 1 week and then the other parent's going to take care of the child the other week. So you can make those kinds of arrangements with intermittent leave. This is not required that it's all concurrent hours. Okay. Another similar question, I don't know if we'll get this later, but there was also some clarification where you can supplement pay. So the limit is up to $511, or it's up to $200 for care of a child at 2/3 their salary. You could pay the extra third. You just have to make sure you use a different earnings code. Okay, so you can't put it all into this paid sick leave. You can't get reimbursed for it. But there was some clarification that you can supplement people's pay with this. Excuse me. So we got that question a lot, and there was some answers to that as well. Our independent contractors, let's see. How do we handle worker? Yeah, I said that one. Are independent contractors, 1099 earners eligible for FFA leaves? No, they are not. Well, they're not through your company. Okay, so you can't pay independent contractors and get reimbursed. But the independent contractors, there is provision for them to get reimbursed from the government to pay themselves for a period of time if they are out. And then the follow-up question with that was, because you read that they were included for the Paycheck Protection Program. So yeah, on the PPP program for the CARE Act, that piece, you can potentially pay independent contractors to keep them enrolled or to keep them, flush. If we use TLM, I'm assuming that the new time off codes will translate into the corresponding earnings codes when we process payroll. Yep, that's correct. If GL entry doesn't tie, where to allocate the difference? Yeah, that's a good question. So we just said that the GL is going to be off. Basically, you're going to have an accounts amounts receivable from the IRS because so whatever the amount of the gross wages for the tax credit, So if your tax liability was $100,000 and you paid out credits for an amount of people, and you're getting credits for $80,000, you're going to need to put an $80,000 receivable that's going to be coming from the IRS. And then you can resolve that once you see that we debit the incorrect amount. So yeah, that'll just have to be done manually. There's not going to be any way for us to do that in the system, at least initially. I imagine we'll have a provision in there eventually once it can go through the development and QA and everything. But we just had to get this out so quickly that we had to skip some of those normal steps. So it's basically on your reports and your GL are going to say that we collected $100,000 for your federal tax liability, when in reality we're only going to collect 20, and you've got to account for the difference manually outside of our system and allocate it however you need to.
Jonathan, I just want to clarify something about the question for independent contractors.
Okay, sure.
So the PPP is available for an independent contractor or self-employed person to apply for a PPP loan, but an employer paying independent contractors is not listed as one of the costs you can use the PPP funds.
Okay, I was
for.
mistaken then. Okay, I said that.
Yeah.
I said the opposite. Okay. Thanks.
Or are they included in how you calculate the maximum PPP loan you can get? You only include employee wages and benefits. So we'll talk about that a little more when we talk about the PPP, but just want to make sure that didn't slip through.
All right. There's a couple questions in here that I think might get answered once Chris goes, so I'll skip a couple of these and then we'll come back to them if we don't answer them. Are you still keeping NJ earned sick time hours separate from COVID sick hours? Yes. Okay, so the new paid sick leave, these new codes that we're creating, you only use them if the employee is eligible and they are taking the emergency paid leave under the FFCRA. Okay, so this does not apply. Like you have to keep them separate. If you have a PTO policy and you have a sick policy and a vacation policy or whatever other kind of policies you have, those are totally separate from this. You still have to honor those agreements. They're totally separate. When they take the COVID time off, that has to be using our new time off codes that we used, flowing into our earnings codes that we're using. Our employees must satisfy a 90-day probationary period before they can use PTO. How would the new accrual tie into our company policy? So there's no probationary period for this. So if you're eligible, if you're employed as a 4-1, you're eligible for the paid sick. Doesn't matter what your policy is. You need to offer the paid emergency paid leave. This is not modifying your PTO policy, so they might not yet be eligible for PTO, but they need to be eligible for the emergency paid sick leave as long as they're employed. The other term for a family leave, for the 10 weeks extended leave, there's a 30-day, so they have to be employed for 30 days. Jason, I'm not sure if you happen to know, is that 30 days, is that concurrently 30 days, or is that 30-day calendar period that they've been hired, or is there any kind of hours requirement for that? I haven't seen anything like that. But
I think it's straight 30 calendar days.
30 calendars. So from the date of hire, there's a 30-day waiting period before you can be eligible for the extended family leave. But for the paid sick leave and for the self-care sick leave and for the care of family sick leave, the 10-day thing, as long as they're employed as a 4-1, they're eligible. There's really no other requirements. And it's not really optional. I'm still unclear as to how the PTO accruals work. Does that mean a full-time employee will not accrue during the 2-week sick leave period? I'm not sure about that part. So if they're not working because they're on the sick leave, should they be accruing PTO? I think that's what you're asking, and I'm not sure what the answer to that is. I doubt.
John, I can answer that.
Okay, go ahead.
It would be based on your handbook. So whatever is in your handbook regarding leave of absences and accrual of PTO, that's how you should handle that.
Got it.
And if it's not addressed in the handbook, is it safe to assume that you don't accrue?
If it's not addressed, you should go back to the way it was handled. Modify your handbook, number one, or number two, go back to the way you've treated similar situations in the past and be consistent with that.
Yeah, so like when somebody went on family leave for pregnancy or extended illness or anything like that, treat them the same way as that. All right. We are a non-essential business forced to close. All full-time employees can telework except for one. We have promised to pay all full-time staff through June 30th. Can I put that one employee in for 2 weeks paid sick leave, even though we'd be paying him anyway? So this depends. If you've agreed to pay him anyway, and he's still employed, then yes, I believe he would be eligible, since your government ordered you to close and the employee cannot telework as of April 1st, they could be reimbursed for 10 days. If they have to care for their family member because they're employed out of school, they could also be eligible for another 10 weeks of the extended family leave, assuming that their child is not able to work and they have to care for the child. So they potentially be eligible for that. Yeah. So if they were laid off, all right, so actually that's the next question. How does this work if employees are wait, let me read this again. Oh, that's a different question. Never mind. We're gonna cover that one a little bit. So yeah, as long as you have not laid off your employees, all right. If you laid off your employees, there is a provision that you can rehire them as of 4/1, and they could become eligible right away. There's also what Chris is going to talk about, the PPP loan, which would let you get some cash to actually pay your employees to do that, which could be very important. But
John, I think go ahead, Jason. I think you're probably going to say something else.
Yeah, on the non-essential business forced to close, the one employee who is working, I think the question was, do we pay them, or can we pay them the 2 weeks paid sick leave? If they're working, you're not going to pay them the paid sick leave. You're just going to let them work, and you're going to pay them as normal.
Correct.
And if they're not working, it has to be because of COVID reasons in order to get the paid sick leave, either to care for a child or because they're actually sick.
Correct.
Well, no, I mean, at least the way I'm reading this is the employee is not able to telework, but you haven't laid them off. So currently they're not doing anything. They're just getting paid. They're basically just getting paid time off right now.
Right. And they don't qualify for the paid sick leave in that case, unless it's COVID related.
Well, it is because they were ordered to close and they can't telework. That's the very first reason.
Okay. All right. I'm sorry. Right.
Yeah. So the very first reason that was listed here is the employee is subject to a federal, state, or local quarantine or isolation order related to COVID-19. So an employer shall provide to each employee employed by the employer paid sick time to the extent that the employee is unable to work or telework due to the need to leave because.
Okay.
So,
assuming they're in an area where they're not allowed to travel to work.
Correct.
Right.
Yeah. So the distinction that we saw the other day is if a company decided to close down because their revenue went down, not because the government shut them down, but just because the revenue went down, that's where this probably would not apply. Like if you just lost revenue, this paid sick leave, you didn't close due to quarantine, you closed because of a business effect. That's not covered. The PPP loan, you got some options there, but not with the paid family sick leave.
Right. Yeah, that's a good discussion because it's one of those areas that can be confusing.
Yeah. All right. Can you address 401k deductions? Are they to be taken from all of these payments? That's a good question. I don't know.
I would say the answer is the same as Jason's answer and how you handle it for other types of leave payments.
Yeah, I'm not sure about 401k. For medical, you can keep making, the employee can even keep making contributions, and the medical contributions that the employer pays are also reimbursable. So it's not just the gross wages that you pay employees, it's the gross wages plus any medical health insurance that you pay for the employee can be deducted. 401k would not be reimbursable, definitely, but I'm not positive. I think we'd have to get back to you on that one. I suspect it's just like Jason said and what Chris just said, but I'm not positive. What does an employee need to supply as far as documentation, if any? So yeah, this was a question asked last week too. We always recommend you ask for documentation, and if the employee is willing to give it, great, you're set. But there's also a lot of clear kind of common sense right now where the CDC is asking you not always to go to a healthcare provider because they don't want you going in and necessarily talking and meeting with and interacting with infected people, or if you're infected, potentially infecting others. So if your symptoms are mild, there's a lot of language that says you should not be going out and getting doctor's notes, basically. So if you can get a doctor's note, great, ask for it. But there are very clearly some exceptions where you don't need to have a doctor's note in order to comply with the rules of getting the paid sick leave. Jason probably would have answered that more succinctly.
You did good.
I already paid Q1 taxes to Beyond Pay. Can I get that back? So not under the FFCRA, what we're talking about here, but potentially under some of these other programs. And Chris, I think that's probably a good time to go through some of these, through the rest of these slides. We just went over on time a little bit too.
Okay. All right. So moving on, talking about the available programs for companies in distress. The first one is something very critical to understand how it relates to the other programs. So the 2020, the Q1 tax deferral. This program allows you to begin deferring payroll taxes for up to 2 years, I believe that the final number is, and then pay them back over a 2-year period of time. Employer payroll taxes, kind of like an interest-free loan to give you immediate cash infusion into your business. We're working on ways to accommodate that on our tax side, so you're going to need to let us know if you choose to do that. The catch is that you cannot do that if you're also going to be if you also receive a PPP loan. So our advice at this point is if you decide currently to go ahead and start the payroll tax deferral, that if you do obtain a PPP loan, that we immediately stop that process and do not do them concurrently, and possibly even use some of the proceeds of the PPP loan to catch up and reimburse what you did defer. So you're not overlapping. At a minimum, we have to stop the deferral once the PPP loan is issued and then catch up. I'm just my professional opinion, and you can check this with your tax advisor or your legal counsel, is that they're going to be pretty generous with how you catch up with that deferral if you do go with the PPP loan. So I don't think it's going to be a huge penalty event or any threat, provided that you do address it.
I'll also add that Wednesday, April 8th, that's so that when we file your taxes this quarter, that we do it accordingly. I mean, quite honestly, some of you guys are going to be making this decision in coming weeks, and you'll just need to let us know, and we'll have to deal with it then. I put the Wednesday, April 8th, I debated on putting that there. That's when we're going to finalize your returns that we're going to file with the IRS. So if you can notify us before that, great. It'll probably save some aggravation for everybody, but that's just a tentative date I placed on there.
Right. So the other one, there's an employee retention credit that's also not compatible with the PPP loans. So you'll see that down there on the list. That's another one that if you go ahead and do that, that you can't do it concurrently with the PPP loan. The other items on there, the SBA debt relief and the SBA economic disaster loans, those can be done in conjunction with a PPP loan, or if you already applied for an economic disaster loan. I have a client that we did that. The second we heard about it, I went online with them and filed the application for the disaster loan before the new act was even passed. And what they said is, what the guidance says, that you can refinance basically the economic disaster loan with PPP proceeds. And the reason you might want to do that is because the forgiveness options on the PPP loans are much better. So I want to point those two out. So we'll start by going through the PPP loan. And the way it looks is that if you can, the preferred place to start is a PPP loan. And what that allows you to do is to get an immediate loan that based on your prior payroll, your average monthly payroll. So if you look back, and this guidance just changed yesterday, the first set of guidance was issued was a little confusing. They clarified some things, but other things aren't as clear. So you have to be careful, because even a document on the Treasury website has an incorrect number on it, from what I can tell. So what they're saying is, if you go back and you look back at your 2019 payroll for the entire year, including gross wages, employer paid benefits, and any state employer taxes. So that would basically be the employer unemployment. You don't include FICA and Medicare and or FUTA, any of the federal taxes, only the state taxes. And you gross that up for the entire year, divide it by 12 to come up with an average monthly, and then you multiply that by 2.5 to come up with your eligible loan amount. Once you receive that money, there's no payments on that for 6 months, and the initial interest rate is for 2 years is only 0.5%. After that, if you don't pay it back or you don't obtain forgiveness, it converts to a 10-year note with a 4% maximum interest rate. Now, the nice thing about this is that it is eligible for forgiveness based on retaining your employees. And so if you maintain certain levels, and this isn't fully vetted out exactly what those levels are going to be, but if you spend at least 75% of that money on actual payroll and you maintain a certain number of headcount and a certain percentage of your original pay rates and total pay, that will be forgiven and completely wiped out. So it's very beneficial. It can address, if you're considering laying off employees for cash flow reasons, it may make sense to keep them on. You can also hire them back. So if you have to do it now because you're not sure, you don't have the money, if you have to lay people off and wait for the PPP money to come in, you can hire them back right away and still be eligible for the forgiveness. So I think that answers the next question on the question and answer, in which, I'm reading the question here. It says, how does this work if employees are furloughed or laid off due to cash flow and lack of work due to the government mandate? I think that kind of crosses over. It will qualify them if you continue to pay them in full under this, or they can, if they're not able to telework because of so this is a tricky one. If you're laying off employees because of cash flow, because of everything that's happening, then they don't technically qualify for the paid family leave. But they would qualify if you hire them back and pay them for loan forgiveness under the PPP. Some of the caveats. So when you calculate the amount you're taking for PPP, it's 250% of your payroll costs, but you can use that money for payroll, for rent, for mortgage interest, and for utilities. So you can use the funds for payroll plus these other areas, but you calculate it only based on payroll. There's no collateral and there's no personal guarantees, but it says right in the document that if you misuse these funds, they will prosecute you criminally. So that's a big deal, and I just caution you to be very careful how you use these funds. So if you get these funds, you lay everybody off and you pay off debts, you're putting yourself at criminal risk, even if you're planning to pay it back over time. So how you use the funds is critical. And I don't know exactly how they're going to adjudicate that. So, if you do have some cash flow coming in for your business on an ongoing basis, my thinking is that as long as your expenses for those items, payroll, mortgage interest or rent, and utilities, at least equal for the time period, the measurement time period, what you borrowed, then you're going to be okay. Just be cautious there. The second program that they've put in place is an SBA debt relief program. So this is if you already have an SBA loan that you've taken out in the past, that there are provisions that you can have that debt deferred or maybe even forgiven partially or fully as an expedient way to get an infusion of cash flow. SBA Economic Disaster Loans and Grants, there's an immediate grant They say it's quicker. You can get like $10,000 right away to cover immediate expenses, and then while you wait for the disaster loan. When I originally went through the process for my client of the economic disaster loan, it took almost an entire day because the system kept timing out. Finally got it submitted, and then they shut the system down. We're only taking manual applications, and now it looks like they may be taking those online again. So I don't know how long that's going to take, which brings me back to the PPP loan. The SBA Economic Disaster Loan and Grant you do directly through the SBA website. The PPP loan you do through a lender, an SBA approved lender. So there's a good chance that your commercial bank or banking relationship you already have is an SBA lender, so check with them. There is an application that they just released. So it's on the SBA website if you follow that link. And that's a kind of a generic application that's being used by all the lenders. They can't start actually accepting them or processing them. The banks can't until April 3rd. But I believe that bankers are saying, start to get that work done and get them into them so you can get in line and they can start submitting those. They're 100% guaranteed by the government, but the bank will be lending you the money. In addition to that, one other thing to note, they don't know yet what you're going to have to provide to prove the numbers you're giving them. So you do that calculation, and it's not clear if they're going to ask for payroll tax returns, if they're going to ask for reports. There is a report in our system. If you talk to your CSR, it's pretty easy to get to. It's basically the pay statement history detail, and it gives you the columns, and you can remove the employee columns, have gross pay and employer benefits, and that gives you a pretty good idea of what your annual pay is. So at a minimum, you may need to provide that report exported from our system with the headers. It should look very nice and official. So hopefully that'll be the extent of what you need to provide. The application itself, I've downloaded it and looked at it. It's actually pretty simple and straightforward. It's not a ton of paperwork. The SBA Economic Disaster Loan, on the other hand, was like filing for a mortgage. They wanted personal financial statement information. They wanted copies of tax returns. So it was much more involved, and the amounts were lower, and the forgiveness is less beneficial. So start with the PPP loan and see how you can do, and then go down and then go from there. The employee retention credit, look that up. I'm not going to talk a lot about that because I think the PPP kind of supersedes it. But there may be cases. The hardest part of all of this is going to be, and I can see from some of your questions, it's kind of deciding what do you do? Do you let people, you get the credit for people taking the time off for COVID-related illness, or do you just keep them on and then get PPP loan forgiveness? And what sequence you do that, that's going to be a decision you need to make with your finance team and your tax advisors. And then also on the small business website, for what it's worth, they offer small business counseling. It's something that's always there. There's independent groups around that do counsel small businesses, and through the SBA, you can get some of that advice, and maybe there'll be some resource there that you can use. All right, so assume there's more questions coming in. Let me just look at those. While I'm looking at the questions, Jonathan or Jason, anything that I might have missed, or you think I should
No, I wanted to just highlight again, we put some links that I think you guys should check out, especially this first one, the dol.gov/agency/WHD/pandemic. That would be a really good document for you guys to read through, especially that Q&A. I know it's long, it'll take forever, it'll take probably longer than this call even, but there's just no substitute at this point. Also use hr@beyondpay.com to ask questions, and we're going to go through a couple questions here. But let me, I'm just going to go back a couple pages to this. I'll just keep this on here. Just like Chris said, check out those PPP loans. It's very likely that you guys are eligible, that many of you are eligible on here. But again, you kind of have to reach out to your tax advisor because there's a lot of nuances and individual things. So work with your accountant on that. All right, let's go through a couple. Go ahead.
The next one, Jonathan, you can answer that one.
Yeah. Does the employer pay for Medicare 1.45%? You stated the 6.2 for Social ER does not pay. Yeah. So just Social Security is exempted you still have to pay the Medicare. So that you still pay 1.45%, you still pay the FUTA, you still pay state unemployment. That hasn't changed, but you're just not, you don't have to pay the 6.2%. And now your FICA is going to be out of balance on reports because there's going to be less subject wages. So that'll be kind of a new thing for 2020, but then it will stop in 2021. I have 2 1099 persons. How do I continue to pay them?
Right. So this might be one of those areas where you would just choose the economic disaster loan over the PPP because the paying the economic, what you use that money for is a little different. So if you have employees and independent contractors, you might want to do both so that you don't have to justify how you use the PPP funds. But there's no provision for any of the time off credits, the employee retention credits, or PPP loans for subcontractors. Although they can, if you have to stop paying them, go get relief directly as self-employed people with either an economic disaster loan or a PPP loan.
Got it. I missed it earlier. There's a couple questions that were put in chat, and I didn't look at them. So how about if we need to adjust for 4.1 to 4.3 because we couldn't get it in this week's payroll? Do we provide you with documentation or the government? So provide it to us. So if you are already processing your payroll this week and it covers wages paid on 4.1, 4.2, 4.3, then we'll just need to do some adjustments. We'll have a hard time. You just talk to us on an individual basis. We'll probably have a hard time getting you your credits with this payroll. That might be challenging, but maybe we can make it happen. But you have to do that through us. Otherwise, we're going to report the wrong amount to the government, and that'll cause more problems down the road. So yeah, just report that to us, and we might be able to squeeze it in this pay period. Another question, if the employee is salaried and taking advantage of the 2 weeks for childcare, will the system calculate the 2/3 pay? So potentially, if you are a TLM client, all right, so you're using time and attendance, all right, we are going to be putting in the 2/3 pay, all right, and we're going to be attempting to put in the cap at $200 per day if you use TLM. If you're not using TLM, we have no way of checking the $200 per day cap or the $511 per day cap. We can only check the annual cap. So the bottom line is, at least for the time being, until you get more direction from us, is you really have to look at each one and just double check that everything looks good. If you're a payroll only client, when you key in the hours, we are going to be putting in the 2/3 of salary. So they should only be getting the 2/3 pay. But again, we can't really look at the daily caps if you're just doing payroll. You don't have TLM with us because we don't have the data. So it's going to be really important that you are tracking that and not paying them more than $200 a day. And then what if an organization mandates an employee to self-quarantine? Can they use this benefit? So kind of depends. If they're experiencing any symptoms and you tell them to go home because of the symptoms, then yes. If you as an organization just decided, oh, you know what, we're just at an abundance of caution asking you to go home, you kind of need the government to tell you that you can't continue to operate. So if you can find in the exceptions that you guys are eligible because you meet the definitions of one of those 6 reasons, then yeah, they can do it. But generally speaking, if you're laying off the employee, no, you can't. If you're laying the employee off, if the employee is already laid off, no. And then if you're just losing business because of everything going on, but not because the government ordered you to shut down, that's also a no, at least from what we understand. So the PPP loan would be the better route in that case. Next question, is the 80 hours additional on top of what the employee already earned on a biweekly basis? Is it for all employees or just those who are out for COVID-19? Yeah, so it's just those who are out for the COVID-19. All right, so this isn't saying that you need to pay all of your employees this unless all of them, unless you are ordered by the government to shut down and none of them can telework and they're still employed as a 4.1, so you've still been paying them, and or if you rehire them as a 4.1, they'd also be eligible. That was one of the things that was clarified. But yeah, the 80 hours is on top of what the employee would already earn on a biweekly basis. So that part of the question is the 80 hours additional on top of what the employee already earns on a biweekly basis. You're not paying them for 80 hours of their regular rate of pay and then paying them an additional amount for the paid sick. This is if they're not working. So you're paying them the 80 hours times up to the maximum rate, and then you're getting reimbursed for that. You're not also paying them their normal salary. So I think maybe that was your question. Hopefully I answered that how you meant. Many people are interpreting the company having to close, mandatory, non-essential, as not part of one. Please clarify. Yeah, so this is a tough area. So if the government says that you're essential and you decide that you're not, and you send people home, I have a hard time arguing that that's a valid reason. I don't know if we'll get more clarification out of that, but if the government says you can't work, and the employer says, "Hey guys, government shut us down. You can't work. We don't have any way of you working remotely," then they're eligible, but only if they're still working and they're hired as a 4-1. That's kind of the kicker there. That makes it challenging. So hopefully the PPP loans can be used to get some cash flow in order to pay the employees and hire them back, and then they could be eligible for 2 weeks of the sick leave, assuming that it was the government that shut you down. So if the company, maybe another way to say this is if the company had to close because they ran out of money, all right, that's not necessarily a good enough reason. But if the company had to close because the government said, "Hey, you're not essential," then then they're eligible if the employee could not telework. So hopefully that clarifies at least my understanding. And quite honestly, this would be a really good excuse to contact a labor law attorney and just double check and actually talk to an attorney about your unique circumstances, and they may be able to say something a little bit better there.
And this also ties into the use of funds for the PPP loan. So if you use both of these benefits, when you calculate what you use the PPP funds for, you cannot include any of the wages under the sick leave that you got reimbursed for. So you're going to have to remove those from the calculation. So it's only for people that you're paying that you didn't get the credit for. So you can't double up there.
Right, you can't double up, but you could use the funds to pay them and then get reimbursed for them. Like if your account is zero and you're now paying your employees.
Well, then you wouldn't qualify for forgiveness for that piece.
Got it. Interesting. Okay.
Because you basically already got the forgiveness in form of the credit.
Got it.
But if you're paying rent too, that might make up for that. So you're kind of doubling up, but that money will be allocated towards rent or utilities.
Got it. If a school or school district opts to end the school year early, would an employee still be eligible for the childcare leave provision? Yeah, as long as it's before December 31st, 2020. Then yeah, the employee that has children that don't have care anymore, they would be eligible for up to 10 weeks at the 2/3 pay, capped at $200 a day, capped at $10,000 gross. And then you'd get reimbursed for up to $10,000 plus any health insurance that you paid during that time. So the government's trying to encourage you to keep paying the health insurance and not forcing the company to go on COBRA, or not forcing the employee to go on COBRA.
And I'm not sure if you mentioned this earlier, Jonathan, but when these benefits run out, and if employees need to go on unemployment, full or partial, we have some guidance that those unemployment costs, if they're COVID related, will not go against your experience rating long term. So some of the funding is helping states with unemployment costs, so they don't have to increase your rates. So that's a valid option too, to just have people go on unemployment, and it won't be a long-term detriment to you as an employer.
Next question, under the self-care condition number 3, and so I pulled that up here, where it states the employee is seeking a medical diagnosis. How is this handled? What if an employee requests leave but does not seek medical care? Yeah, we talked about this a little bit in the last webinar too. This is definitely a little bit of a gray area. But there is more clarification in that FAQ. So I encourage you to actually read that FAQ because there's some good things with that. But basically, it's kind of a best educated guess. All right. And it seems like the government's kind of siding with the employee on this. So if the employee suspects they might have COVID-19, that seems like it's good enough. I would still encourage employers to ask for a doctor's note, or at least try to show that they tried to seek medical advice, right? Teledoc is really popular right now. And a lot of the insurance carriers are even offering that for free with no copays. They even had some clarification for high deductible plans. They didn't have to have a copay for teledoctors during this time because they want to encourage people to use teledoctors. So ask for the note, but if you can't get it, I don't think it's going to be a big deal at this point. But pay attention to those FAQs because this is a really commonly asked question. But for now, I haven't seen anything that said, no, you need to have proof that the doctor told you blah, 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 blah. I have yet to see that come out.
There's a question here in the chat that I'll address. My company has employees that make over $100,000 per year. Is there a report that can be run showing the first $100,000 plus taxes for the PPP loan? So again, remember taxes, you have to be careful. You only want to include the state unemployment taxes, not the federal employer taxes. And the answer is yes, we could help you with that report. The other way to do it is to just run the report with everybody's gross salaries for the year and export it to Excel or to Google Sheets, and then you can just add a column and make the $100,000 a maximum, and then do the math that way. So that might be faster for you, depending on how many employees you have. You could also go into that sheet and just change their pay to $100,000 and adjust the total if it's only a handful of employees. So talk to your customer service rep; they can help you with either of those scenarios.
If someone was already on unpaid family leave after exhausting state paid leave, are they now eligible for COVID family leave or no because their unpaid leave predated COVID? Jason, we got that question last time and I forget what you said.
Yeah, so in that case, they would have to be notify you that they're eligible to return or they're coming back to work. And once they say that and you say, okay, well, either I have work or I don't have work. If they don't have work, they would go on unemployment. If you do have work and they can come into the office or they can telework, then they would be then eligible for sick pay if they meet one of those requirements or the extended FMLA.
Got it. How do you find out if you're exempt from paying family leave? Yeah, so you're only potentially exempt for this reason number 5 right here. I'm getting click happy. All right, so for reason number 5, and then if you go to the helpful links and click on pandemic, and then it's this very first question and answers. All right, and then you scroll all the way to the bottom. This is just updated a little bit ago. All right, these last 2 questions, that's your answer. So read through that, and these 3 reasons are basically your reasons that you have available for that. So it's only for if your employee's told they're going to go home because they have to take care of their child. That's the only valid reason. So again, go to our webinar here, the FAQ page, go to this pandemic site, go to the FAQ, and then it's the last 2 questions. Now, this keeps updating, so it might not be the last 2 questions by the time you get to it, but yeah, that's a very commonly asked question that kind of has I don't know, it's kind of complicated, but they're outlined right there, 1, 2, and 3. Let's see. GL postings. If the actual tax payments will be less than it was accrued, why the difference would be accrued income? As you said, we are already paying less. Maybe I misspoke earlier. I guess the bottom line is the GL, our system thinks you owed $100,000 of taxes, but we're collecting less than that. You're going to need to account for that outside of our system. I guess maybe I said, I don't remember saying anything about accrued income, but maybe I misspoke. How will the medical cost reimbursement work? So we don't know the official form. So the 941 hasn't been released. They've just told us that you add any health insurance to the amount. So if you're not already tracking health insurance through our system, now would be a great time to start that. Most clients already take advantage of that, but if you're not tracking health insurance premiums through our system, this would be a good time to do that, because then we could help facilitate that. Otherwise, you're going to need to get that information to us so that we can fill out your 941 and get reimbursement for that. So let me ask, can we assist for applying to these programs? So if you're talking about the PPP programs, you're going to work you're going to want to work with your accountant on that. So we can point you to an accountant so that we work closely with, and that might be a good solution for that, for us to help and assist. But Beyond Pay, the entity Beyond Pay, can't help you apply for these programs. We're not able to do that, but we could point you to somebody that we work with that could help. In calculating the wages, do you stop at 100,000 gross cap for employees over 100? Yes. So for the PPP loans, you include, Chris, is that correct? You're including up to 100,000. It's not that you have to exclude anybody paid more than 100,000. You're muted.
Correct. You
Okay.
stop. You count the 100,000 and then stop counting after that. Yes.
Yeah. Does the PPP loan have a seasonal employer calculation? Yeah, somebody asked that earlier, and I meant to look it up, and I don't know. Chris, do you happen to know? Is there any kind of seasonal considerations?
Yes,
for cash flow?
It says.
Somebody else asked that earlier.
If your business employs seasonal workers, you can opt to choose March 1st, 2019 as your time period start date.
So it depends when your season is, whether that'd be helpful or not.
Right. Yeah. So I would say use your best judgment of what's the most representative of your average monthly, and just be able to answer and justify it. See that. Let me look at the new, because that was the old one. Let me see if they change that.
Yeah, we can come back to that too.
Okay.
I'll answer a couple more. Can you have both a PPP loan and pay people for the FFCRA? Correct. Yes, that's correct. So you have to comply with FFCRA. You can also apply for the PPP loan. Just like Chris mentioned earlier, though, you have to be careful with what you pay funds with the PPP loan. So you have to try to not pay funds with the PPP loan if you're getting reimbursed by the government through the FFCRA. So I don't have any idea how they would calculate that or figure that out, but there it is. If you keep people on payroll, do they actually have to be working, or are we paying them so that they do not have to collect unemployment through the state? Yeah, that's a good question. The purpose of this is to keep cash flow to the employees, so they don't necessarily have to be working. If you can have them be working, it's a good idea. If there's things you could have them work on, it doesn't necessarily have to be according to their job description, unless there's some kind of employment contract. But generally, and Jason, you can maybe interrupt me. I don't know if you have something better to say over that, but
no, what you're saying is correct.
Okay, yeah. So you don't necessarily, if you hire somebody to be a widget installer, all right, and you no longer have widgets, and you have, but you need them to fill out this paperwork for you, you're allowed to do that. So they don't necessarily have to be doing the same work. So there's some. But they can be doing work, but they don't have to be doing work. You could just be paying them, and they could, instead of going through the unemployment.
As long as they meet the requirements.
Right. All right. Somebody said, don't believe the link on Beyond Pay site for the unemployment and tax compliance by state is working. Okay, thanks. We'll check that out, and we'll get that working. So yeah, there should be a link on our FAQ site that takes you to a Google sheet that has a list of every single state and links to the unemployment states. I mentioned this last week, but many of the states have accelerated unemployment as well as a result of this. So there's waiting periods in most states. A lot of states have accelerated that. So check out the individual unemployment states for details on that. You can also point your employees, if you had to lay them off, to their state unemployment state so they can see their rights. Are vehicle or equipment leases allowable expenses under the PPP? I have no idea.
What was
Chris,
the question?
Are vehicle or equipment leases allowable expenses under the PPP?
They're not listed. Nope. And just to clarify that as well, for mortgage interest and leases, it's only for leases that were signed prior to February 15th, 2020. So,
okay.
Anything that you do after that, if you closed after that or you signed a new lease, technically it's not eligible.
So when it comes to the childcare issues, an employee can stay out until December because of COVID-19. Not exactly. So the benefit is available through December 31st, 2020, but you can only get up to 12 weeks total. So 2 weeks at the self-care or the care for a family member, and then the 10 weeks of extended family leave. So you can't get anything outside of that. So if you're 4 weeks away from December 31st, you could only get up to 4 weeks. You wouldn't be able to carry it over into the next year as it's written right now. But it's not that they can just take off now and then you have to pay them through the end of the year. It's only a cap of 10 weeks. Now, under the PPP, if we're talking that might be something different. So there's different stipulations for taking that cash and keeping up with the money. But
yeah, and you also have the economic disaster loan that is more generous as the type of things you can use it for. You can basically use it for, for any other operating expense. So that kind of follow up to the answer to the previous question as well.
got it.
The PPP, in order to get forgiveness there, people have to be brought back and hired back by June 30th, or continually kept employed all along. It doesn't mean you can't get it doesn't mean you're disqualified from the loan or that you misused the funds. It just means that you won't get forgiveness.
Got it. All right. One last question asking about a report and payroll. There's definitely canned reports of payroll taxes, but I even from the question, I'm not sure exactly what you're trying to do. So just reach out to your CSR and they can help you out. But yeah, there's definitely reports available for this.
And I couldn't find anything definitive on the seasonal. So you probably just have to look for guidance on that.
Okay. Again, use hr@beyondpay.com to ask. For a lot of these loans and the FICA stuff, you'll need to talk to your tax advisor. And again, if you don't have a tax advisor, an accountant to work with, we can hook you up. So again, thank you everybody. Bear with us. Be patient. We're learning this as you are. But stay tuned for more info. There's going to be a lot of stuff happening to be tracking this paid sick leave. But again, thank you everybody and have a great rest of the day.
Yes, thank you everyone. Be safe and be well.